In the meantime, I want to get some more perspective on GDP data with Mike Englund. He's the chief economist of Action Economics and ranked one of the most accurate forecasters in the world for gross domestic product. So you certainly want to bring him on for days like today. And Mike, I know that your forecast, from what I can see in my notes here, was for GDP at 2.7%. That was at the lower end. So are you surprised that we've actually come in at 3.2?
Yes, it certainly was an upside surprise. And one encouraging note in the report was that the equipment component was stronger than we had expected. Equipment spending grew at a 13% clip. We thought that number could be pretty close to flat if you trade adjusted the domestic equipment numbers and look at some of the weaker durable and factory goods reports for the first quarter. You might have suggested or expected a lower number. But interestingly, if you look at the sales components, there were actually offsetting errors. Final sales looked like it had grown 1.5%, and it grew 1.6%. So all the sales numbers are pretty much in line with expectations. Trade was a little bit weaker to offset the equipment numbers. So apparently some of that trade didn't appear in the export numbers. It actually popped up in the domestic spending. And government spending fell a little more than expected, and that also offset some of the upside surprise. So generally sales are growing at a moderate pace, and the upside surprise to us, and what really accounted for the error, was that the inventories just added more to first quarter growth than we had expected.
Right, and I don't want to lose that point you just said, Mike, because it looks as if what we're seeing is, because with trade, those numbers coming down, it looks as if the demand is now coming more from the domestic side. I don't want to lose that point there.
Yes, it's certainly a worthwhile rotation. You know, if you look at domestic or final sales, what we've seen is actually a remarkably stable pattern. The 1.6% gain this quarter followed 1.9% in the fourth quarter and 1.5% in the third. So we're growing pretty much at a 1.5% to 2% clip with spending. It'd be nice if we were growing faster than that, coming off a big downturn. You might expect us to be kicking up toward 3 or 4% by now, but we may be seeing that going into the second and third quarters because we do have, as noted, a better equipment trajectory here in the first quarter. If businesses can come back to bat and start spending at a faster clip going into mid-year, perhaps we will be able to kick up this domestic sales rate.